Good morning, everyone. Happy Tuesday. Welcome to September. It is DeFi season, and we have a very exciting show that we're going to go through today. I am your host. My name is Adam Han. If you have never seen me speak before or have met me in person, I lead community at the Stacks Foundation, and I'm really excited to be here, spending the next 60 minutes with you talking about DeFi and Bitcoin DeFi specifically. So, this is part one of a three-part webinar, three-part workshop that we have lined up that we're going to be bringing lots of information and educational and informative content to you to help you get started, whether you're a beginner or whether you're advanced in your DeFi journey, your Web3 journey, your Bitcoin journey, your crypto journey. Wherever you are on that journey, the goal of this webinar and of these workshops is to help take you further along and to get you introduced to some key understandings, key concepts, key strategies, and ultimately just a much better, full-rounded, good to know information about how to get started activating your Bitcoin and getting you started as a DeFi user and getting some yield on your Bitcoin. So we're going to get started. Before I get into the specifics and bring up some guests that we have, I want to kind of lay some context here to kind of level set and get everybody at the same page. So, why do we want to be focusing on Bitcoin with this workshop and the next workshops that we have in the future over the next 2 to 3 weeks? A lot of the DeFi that we're going to be talking about is all going to be focusing around Bitcoin and different ways where you can earn yield on your Bitcoin and put your Bitcoin to work. But why do we have to start with Bitcoin? Like why Bitcoin? So if you are new to this space, this is a good place to get started right here from the beginning. So why Bitcoin is simply put, Bitcoin has unrivaled adoption than any other crypto, any other digital asset that the universe has seen. It's no secret that everyone you could possibly ask as you maybe run into people on the street knows what Bitcoin is. Maybe they've heard of Bitcoin, they're familiar with Bitcoin. We've never seen the global adoption of any other asset as we have seen with Bitcoin. It also is very consistent. Bitcoin has been rolled out and been around for nearly 15 plus years now at this point, and it still is the leader in blockchain and in crypto and in overall digital assets when it comes to the offerings that it provides and ultimately the security that it provides. There's no other blockchain that we've seen in the ecosystem that can match the security and the true decentralization that Bitcoin can offer. So Bitcoin is the key and critical and apex digital asset. So that's why we want to start with Bitcoin. Why DeFi is also a very fair question to get people in the right headspace for today's workshop. But ultimately, DeFi it provides users borderless access. DeFi allows your money to be working for you 24 hours a day, 7 days a week. DeFi allows you to build trust with yourself and your money, where you don't have to hope that somebody that you're working with is going to have your best interest at heart. It is trustless technology. Trustless meaning that the technology needs to work for you and it can't do you harm. So when we put together these technical products and these technical strategies that we'll get into in a few minutes, these are all understanding that this is utilizing Web3 technology and trust minimized technology. And so one thing that comes along with that is radical transparency. Every transaction, every movement, everything that's happening on a financial ledger with your finances or with your crypto is viewed and available to be seen, and it's very transparent for everyone out there to know what's going on with your finances, with your crypto. So these things make it very efficient. This makes finance very efficient and also enabled to be very productive so it can be your finances can be working for you. So that's what we're going to be bridging together today. We're going to be bringing together the values and ultimately the strengths and the features that Bitcoin has, and we're going to be combining them with the strengths and the differentiators that DeFi has. And we're going to talk a little bit about how those two come together. So if you think of Bitcoin, the general world thinks of Bitcoin as this digital asset. And even just a second ago, that's how I introduced it. But when you think of Bitcoin as a technology, when you think of Bitcoin as a blockchain, it helps kind of open up and expand your mind a little bit about what the possibilities are. And so when people think of Bitcoin reaching a billion people, it's really hard to make that connection because Bitcoin, as it's currently laid out, or as it was laid out when it first launched, wasn't truly designed to be scaled. While Bitcoin is the apex crypto asset, it just simply cannot scale to reach a billion people in every corner of the world. As accessible as it is, it's just truly very complicated for Bitcoin to scale at the L1 at the base layer alone. The things that make Bitcoin so reliable and so secure are also, in a way, its pitfalls. And those are the things that make it hard to build financial application or a financial application layer on top of Bitcoin. So, to combat that, so to enable Bitcoin to reach a further audience, to go to newer heights, this is where the introduction of Bitcoin layers comes into play. Bitcoin layers may be the single most important development for truly growing and unlocking the potential that Bitcoin has and enabling a true Bitcoin economy. So if you look at this little diagram on the right of this slide, you see Bitcoin. Think of this as sort of like a glacier. At the top of the surface, you have Bitcoin, that the way that people understand Bitcoin today. But underneath the surface, you have this entire untapped and right now unproductive economy that Bitcoin is going to activate. The simplest way I like to describe this to really help people try to wrap their heads around it is think of real estate. So, real estate is an asset, property is an asset. It does increase in value over time because it is a limited asset. It is a fixed asset. But if you were to build a building, or if you were to make that building have a storefront, or offer goods, or offer services, if you were to offer commerce on that piece of real estate, the value of that real estate is going to go up a lot higher and a lot faster. That's ultimately the same thing as what layers are doing to Bitcoin. Layers are bringing commerce, bringing transactions, bringing different things that can be offered to the Bitcoin world. And so Bitcoin layers ultimately are the solution to help Bitcoin scale to a billion people and to do a lot more with your Bitcoin. So it's not just this stagnant digital asset that you're holding and hoping that the number goes up over time. So that's what the design and the intention behind layers are. Simply put, they help Bitcoin scale to more people in a secure, efficient, and affordable way. And so what some of my guests today are going to be talking about is different types of use cases that Bitcoin layers bring to the world of Bitcoin. And ultimately, by the end of today's workshop, you'll be able to see that Bitcoin layers are unlocking the possibility for Bitcoin to be productive, to be an activated economy, and that every form of capital needs to be productive. And this is what layers do for the Bitcoin ecosystem. So how do layers activate Bitcoin? Well, for the Bitcoin economy to truly scale the way that we envision that it needs to be, there is a blockchain called Stacks. Stacks is the leading Bitcoin layer 2. This is a blockchain that allows decentralized financial applications to use Bitcoin as a secure base layer. So what that means is there is a Stacks blockchain that can run smart contracts and can run financial applications, decentralized finance applications. And once those transactions run on the Stacks blockchain, it has a native tied to the Bitcoin layer 1. So every transaction and every smart contract that runs on the Stacks blockchain utilizes the Bitcoin layer 1 as a secure base layer. So in short, Stacks extends the capabilities of Bitcoin without changing Bitcoin, unlocking billions in latent capital. And so Stacks is also introducing another digital asset that is a native Bitcoin asset called SBTC. So SBTC is the asset that ultimately brings smart contracts and decentralized applications and financial applications to the world of Bitcoin. This is the best way to borrow, trade, and earn Bitcoin on chain. So if with SBTC, you can be earning yield through lending, through borrowing, through utilizing decentralized exchanges. But you can do a lot more beyond just yield. There's plenty of ways where you can earn yield utilizing SBTC and utilizing stacks, but there's much more that can be done beyond just yield. SBTC ultimately is enabling the functionality for decentralized financial applications to exist and to live in the Bitcoin ecosystem. So I hope that little background kind of helps you all get up to speed in terms of where we are going to be moving things forward with the rest of today's workshop. What we're going to be doing now and for the next couple of minutes is be hearing from a variety of different founders of different products that are ultimately the key leaders of DeFi applications in the Stacks and Bitcoin ecosystem. So we'll be hearing from people who are going to talk a little bit about different products that you see here on the screen: Xverse, Granite, Lather, Hermetica, Zest, and Stacking DAO. And each of these will be a little bit different, but ultimately each of these decentralized financial strategies offered is a way for you to do more with your Bitcoin. So I encourage you all to think of this as a really good learning opportunity. Feel free to take notes. Feel free to record things and take screenshots. This will be very informative. And I hope you get a lot out of this. So ultimately, by the end of this workshop, you feel that you're prepared and you feel that you're capable of putting your Bitcoin, putting your crypto to work for you and earning yield and ultimately becoming a much more DeFi expert when it comes to the world of Bitcoin DeFi. So with that said, I will pass it over to our next speaker, and they will tell you a little bit more about how to get started utilizing their product. I'm going to stop sharing my screen now, and I will pass this over to Kate. And Kate, I will let you take it from here.
Hey everyone, thanks for tuning in. I'm Kate, community lead at Lather Wallet. Today, I'm diving into one of the most unique and easiest ways to earn Bitcoin in the Stacks ecosystem. It's called stacking. Stacking lets you earn real Bitcoin by helping secure the Stacks network. It's a straightforward way to grow your Bitcoin holdings. So over the next 10 minutes, I'll cover what stacking is, why it matters, and how you can get started using wallets like Lather and Xverse. All right, let's jump into it. So what is stacking? Stacking is the process of locking your stacks or STX tokens in order to help secure the Stacks blockchain. In return, you earn real Bitcoin rewards paid straight to your Bitcoin address. As a stacker, you're providing a critical service to the Stacks network, maintaining consensus of the chain, and the protocol rewards you in Bitcoin for doing it. Stacking has been live and operating securely and reliably since 2021. And historically, yields have paid stackers around 7 to 10% APY. But I want to highlight two key points here. The first one, rewards to stackers come in Bitcoin through proof of transfer. This is the main mechanism of the Stacks chain. Miners commit Bitcoin for the right to mine Stacks blocks, and that Bitcoin is distributed directly to stackers. So that's where the yield comes from. Second, your Stacks always remains in your wallet. They're locked at the protocol level, so they're never moved elsewhere, and they become usable again to you at the end of each stacking cycle, but only if you want them to. Otherwise, they can stay stacking and earning. So why does all of this matter? Well, stacking is the only way to passively earn Bitcoin at the protocol level directly through consensus. By participating, you're strengthening the Stacks chain, which ultimately unlocks a better environment for DeFi activity and new use cases on Bitcoin. And for Bitcoiners, it's powerful because it gives you a way to grow your Bitcoin without needing to risk what you already hold. Here's what stacking looks like in action today. The current reward rate is around 7 to 9% APY in Bitcoin. There's over 580 million STX that are already locked, securing the network. And this means that more than 3,600 Bitcoin have been rewarded to stackers over the lifetime of the protocol. And in the last recent stacking cycle, there was nearly 11 BTC paid out to stackers. All right, let's jump into how this actually works. There's two main paths that you can choose as a stacker. The first one is called solo stacking. This means you're running your own signer software and you're meeting a higher stacking minimum of around 120,000 STX. This gives you direct participation and independence, but it's more advanced and a slightly higher barrier to entry. The much more approachable path for the everyday stacker is called delegated stacking. This means you pool your STX with others, and then you let the pool operator handle signing and reward distribution. And you can get started with as little as 40 STX this way. There's some really amazing pools out there that make it super easy to get started. And I'll shout out Stacking DAO, who's nearing the $100 million STX milestone. So soon, 1 in every 6 STX that are stacked will be through their pool. Now, stacking runs in roughly 2-week reward cycles based on Bitcoin blocks. Each cycle has 2 phases. The first phase is called the prepare phase. This lasts about 100 Bitcoin blocks, and this is where new stackers commit their stacks. Then comes the reward phase. This lasts about 2,000 Bitcoin blocks, and this is where miners transfer their Bitcoin to the stackers' reward addresses. So this whole process takes around 2,100 Bitcoin blocks, which translates to about 2 weeks. Now, you can choose to unlock your stacks at any time, and they will become usable to you again at the end of the stacking cycle. But again, I want to point out that no one takes custody of your stacks during the cycle. They just become unusable at the protocol level while they're helping provide consensus to the chain, and then they become spendable again in your wallet once the cycle ends. So next, I'm going to show you just how easy it is to do this in practice. For this example, I'm going to use Leather Wallet, and then I'll slightly touch on how you can get started with Xverse as well. Okay, so if you're not able to hear this, I'm just showing you the Leather dashboard. This is where you can go and look at all the different pools that you can choose to stack with. So some of them will pay out in STX, some of them will pay out in Bitcoin, and they have different minimum commitment requirements. So in this example, I'm choosing Plan Better. They're paying out in Bitcoin rewards. They have a minimum of 200 STX, and I'm just showing how to actually go through the transaction approval process using Leather. I'm signing the contract. And it's super easy and quick, just like that. My stacks were now committed, and then my rewards will be distributed to my Bitcoin address, which is also linked in my Leather wallet. And then shortly, I'm going to show you how to actually do this in Xverse as well. So Xverse has their own pool. They do require a minimum of 500 STX, same 2-week lockup cycle, and their rewards are also distributed in Bitcoin. All right. And so I have a simple call to action for you. Download Leather or Xverse and try stacking with whatever amount feels most comfortable to you. Even if it's small, it gives you the experience of earning Bitcoin passively in a safe and simple way. So if you want to go deeper, there's a lot of guides, docs on stacks.co, but there's also great resources through Leather, Xverse, Stacking DAO, and other community resources where you can learn about solo stacking, running a signer, or even pool operations. But the best way to start is hands-on. So thank you guys so much for tuning in, and happy stacking to you all.
Hi, everybody. This is Jacob, founder CEO of Hermetica, and I'm here today to talk to you about USDH and the yield opportunities that comes with it. So let me explain how USDH works because it's really quite simple. We set out to build a stablecoin that is fully backed by Bitcoin. And how we do this is that we hold Bitcoin, the protocol holds Bitcoin on the spot market, and then shorts the same amount of Bitcoin on the futures markets. And what happens if you do that is that you essentially lock in the dollar value of Bitcoin. So you can think of USDH as a dollar or as Bitcoin without exposure to price. One USDH is always $1 worth of Bitcoin. And now that is obviously a really cool innovation because you can stable dollar value without ever relying on the banking system, on the fiat system. You can hold a dollar that is backed by Bitcoin and native to the Bitcoin ecosystem. But it doesn't stop there. There's actually another element that makes it even more exciting. And that is, since a lot of folks want to be long Bitcoin, people want to have leverage on Bitcoin, and the protocol is essentially selling this leverage by shorting the futures markets, there is a yield. There's an interest rate that is getting paid to the protocol. And folks that stake the stablecoin, so you can come to our app, I'll show you that in a second, and stake USDH, you get paid every day a very significant yield. Since the beginning of the protocol around a year ago, folks that have been staking have earned around 16% of APY on their USDH in dollars, fully backed by Bitcoin. Now let's jump over to the app so I can give you an overview of how it works and show you how simple it is. So here you're on the app and it's really quite simple. You can take any Stacks asset and swap into USDH. So I've selected Stacks here, STX, and you can just simply swap into USDH any amount you want. I already have some, so I'm not going to do that right now. This is powered by Bitflow in the backend. So you're just swapping through some DeFi pools, and you can do this with Stacks, SBTC, but you can also do this with USDC on Ethereum. So you have some USDC lying around, it's not earning any yield, it's actually still fiat backed, and you wanted to put it into a Bitcoin backed stablecoin and earn yield. You can do this all in our app. You can connect your MetaMask wallet or Phantom or OKX wallet on Ethereum and then go directly from Ethereum into USDH on Stacks. Now, once you have some USDH in your wallet and you want to earn that sweet yield, you can come to stake. And again, super simple. You can select how much you want to stake and then just execute the staking transaction. And you're right there. Now, what you receive is staked USDH. It's a token. You can buy, you can sell it, you can hold it, you can transfer it. Staked USDH goes up in value. So you see here, the price of one SUSDH is right now 1.18. So it goes up every day. And how you see that is if you go to the portfolio tab. Portfolio tab shows you how much USDH you have in your wallet, but also how much you have staked. And it shows you how much APY you're getting. I've earned a total yield of $1 over the time that I've been staking. You see here the value of SUSDH goes up quite nicely. This is a chart that is beautiful to look at, right? Up and to the right. And then here on the bottom, you see every day, this was yesterday, you get a payment into your wallet. And how is that done? Is that the price of staked USDH is going up. So yesterday it was a 0.03% yield that you received or that I received, and my balance went up accordingly. Now, that is how the protocol works or how you can interact with it. Very simple. You can swap into it. You can stake. You can obviously unstake and claim it. And then you can watch your portfolio grow. If you want to understand more about the behind the scenes of USDH and the protocol, you can come to our magnificent dashboards. You have the transparency and the APY dashboards here, and they show you exactly what's going on in the protocol. So you see the protocol right now is backed 101% by Bitcoin. I explain in a second why it's 101%. So it's over collateralized at the moment. You see what it's backed by. mainly Bitcoin, right? Right now it's $6 million in Bitcoin, 200 and $200,000 in liquid stables. Why is there some liquid stables in here? Because folks that go in and out of the protocol choose to do so mainly in USDC and USDT. So folks come into the protocol in USDT and also want to go out of it by receiving USDT. And that's why there's a little bit of liquid stables in here. The secondary price is stable, like a stable coin should be, always around 1. And then if you go deeper down, you see actually really what's going on behind the scenes. Since we're short the futures markets, we have to trade on centralized exchanges. This is done by holding the Bitcoin not on the exchange, this is very important, but in qualified custodians, institutional grade custodians, namely Cefu and Copper. And they allow us to trade on the exchanges without actually ever holding the coins on the exchange. So we're not exposed to the exchange's balance sheet. So if they go bankrupt, our coins are safe. And you see here exactly where the funds are. We're trading on Binance, Bybit, OKX, and BitGet. And you see here some of the coins are in Binance, or the majority, really 41%, and some of it on Bybit, etc. And you have it here broken down also in a pie chart. Now, this is all nice. You see this in real time updating, but it is us showing you what's going on. But you don't have to trust us. You can actually come down here and you see attestations. You see Copper and Cefu, those are custodians. And if you click on, let's look at the latest one on August, we just published this a week or so ago. You see the exact breakdown of how many assets are in the protocol, how many USDH are actually on chain. You can verify this yourself. We're live on Stacks and Runes. So here's the two different ways to verify the circulating supply of USDH. But then you also see where are the assets, and they're held on Copper and Cefu. There's also some on chain, on Stacks, on Ethereum, the reserve fund, which we'll talk about in a second. And then, most importantly, you have attestations signed by the directors of these custodians to actually attest to these funds being in their custody. So you don't have to trust us. You can actually go and verify it yourself. Obviously, the things that are on chain, you can do and verify yourself as well. And you see here, it's over collateralized, as we said on the website as well. Now, we said it's 101% over collateralized. The 1% extra comes from the reserve fund. The reserve fund is essentially a buffer that is used every time there's a negative yielding environment. Sometimes the funding rates, which is the interest rate paid by the futures, goes negative, and we actually have to pay to have the position open. It's quite rare. We'll get to that in a second. But when that happens, the reserve fund kicks in and makes it so users really only see a positive or a 0% yield. That's where the reserve fund comes in. But now let's jump over to the APY dashboard and look at how the return profile of USDH looks like. We have the historical APY. This is 7-day APY metrics. You can see it's fluctuating. It was very high at some point, 70%, but on average, it's quite significant, significantly above 10%. And over the last 7 days, it's been 9%. Over the last 30 days, it's been 10.23%. Now, there is, as I said, negative funding days, and you have a chart here. If you look at all time, it's around 16%, I believe, yes, that there's a negative day, and that is where the reserve fund kicks in and buffers that out. We also show you how much the USDH APY is above the 3 months treasury, right? This is the reserve asset of the world, the reference rate of the world. And as you can see, it's very significantly above, except for very small periods of time, above that interest rate. So it's more attractive than what TradFi can offer. And last but not least, this pie chart shows you that most of the time, actually, the yield is above 15 or 10 to 15%, right? Only 4% of the time it was between 0 and 5%. So that is the complete app. I invite you to come in and check it out, poke around, see really how it works, swap some, stake it, look at your portfolio to grow. If you want to stay informed, you can come to our website, hermetica.fi. Put in your email here at the very bottom of the website, and you'll get a weekly email with updates of what we're doing, what we're seeing in the ecosystem, etc. And then obviously come and say hi on X. I'm Jacob. underscore BTC. And then you can also follow Hermetica FI and keep up to date that way. Thanks so much, guys.
Cool. So, hey, everybody. My name is Brandon. I'm on the marketing team here at Granite, which is a Bitcoin lending protocol that's built on stacks and powered by SBTC. And excited to talk to you about Granite today. There's a lot of lending protocols out there. So, I want to talk to you about why Granite, how Granite stands apart from nearly all of them with a few core features. First one is no rehypothecation. Basically, that means that your collateral is never lent out to anyone. So if you deposit Bitcoin, your Bitcoin is not then being lent out to somebody else, which would make it difficult for you to get your Bitcoin back if it was being actively lent out to someone else. So instead, your Bitcoin stays locked in a smart contract and it's available whenever you need it. Soft liquidations mean that if you have an active loan and your position needs to get liquidated, most DeFi protocols actually have the power to liquidate between 50 to 100% of your loan. Granite's soft liquidations will only liquidate the amount needed to restore your account health, which could be the difference between a 1% liquidation and a 100% liquidation. And offline position tracking, I can set up custom Telegram notifications that track my position on Granite. You can set custom targets. So if your account health dips below a certain number, or if borrower rates exceed a certain number, it just allows you to ensure that your loan is staying healthy and fits within your overall DeFi strategy. And again, I should mention that no other DeFi lending protocol does all three of these things. So Granite is really unique in these features. And this is just a quick look at Granite's design. It's really designed to keep things simple. Currently, it supports SBTC as collateral and USDC via Allbridge. That's what you're taking out, which is a stablecoin. Borrowers would supply SBTC as collateral, can take out loans as AEUSDC, and then LPs, if you want to be a liquidity provider, can provide AEUSDC and earn a yield for doing so. Because of these properties and just the intentional sort of simplicity of the design, we like to say that Granite is the safest way to borrow against your Bitcoin. And people are taking notice. So Granite launched at the beginning of this year in 2025. It's currently in open beta, but it's already seen a ton of growth and interest from retail and institutional users. Over $24 million between SBTC and AEUSDC is on the platform, and it's continuing to grow. It's currently ranked number 3 out of all the stacks DeFi protocols by TVL on DeFi Llama. You can really see the explosive growth here over the past couple of months as more users discover Granite and get on board. This right here is one of my favorite views on Granite's app. It's the market tab. Kind of gives you a top-down look at all the most important Granite metrics, and it's always accessible at the link below, that app.granite.world/market. We can see information like current TVL, broken down by how much collateral is in the protocol, how much is borrowable, plus earn and borrow rates, and more. We can see right now earn APYs are nearly 12%. Granite launched an LP incentives program in April, which has been producing really strong APYs for early users of Granite. LP incentives are currently paid in STX, and I'll share some more alpha at the end of this presentation on what's next for the LP incentives. You can also see here that borrow APYs are currently lower than 1%, currently the best rate in the Stacks ecosystem, so definitely pays to be early. Pretty good rates overall. Granite launched at the beginning of 2025, currently in open beta, already seen a ton of growth, and this is just another look at those numbers there. And enough talking, I'm going to show you actually what Granite looks like, and we're going to provide some liquidity together and see how easy it is to start LPing on Granite and start earning. So I'm going to go to app.granite.world, and hopefully you are going to follow me there with my sharing screen. I'm going to hit connect wallet. I'm just going to connect Lather or Xverse, Signa, Fortify, etc. So I'm going to connect my Lather here. All right, so I'm in. I have two options. I could either borrow AEUSDC. I would have to deposit SBTC as collateral first, or I can earn AEUSDC and become a liquidity provider. So I'm going to do that now. You can see right now in real time, the rates are 11.61% APY. I'm going to click on earn AEUSDC. I can put in however much or however little I want. For this demo, I'll just do $10 worth just to get started, and I'll submit that transaction. And you might not see my Lather popping up asking me to submit, but I'm just approving the transaction here. Okay, there we go. It's working. All right, so I hit approve, pending deposit of $10, and we can see it just completed down there. And it refreshed the screen for me. So now I can see immediately I'm already earning at 11.61% APY, $10 worth. And I can also go over here to LP incentives. Every week, there is a rewards epic where you need to go and claim your rewards. Those rewards currently are in STX. But like I said, I'm going to have more to talk about in a little bit on where rewards are headed. So exciting stuff there. I'm going to jump back over to my presentation, talk to you about just a couple more things. So a few more safety mechanisms that I wanted to make sure that I highlighted that Granite has added recently. So first is withdrawal throttling. So if you've been in DeFi long enough, you've probably seen one or more protocols get exploited and have their assets drained. It's just a thing in DeFi that happens sometimes. Granite recently, though, introduced withdrawal throttling, which is a really powerful safeguard that limits at the smart contract level the amount of assets that can be removed from the protocol in a given time frame. So under normal circumstances, you'll never notice that this withdrawal throttling is there, but it really massively reduces protocol risk and basically makes it so that it's much, much harder, if not near impossible, to drain Granite if there's an exploit that's found by an attacker. Community liquidations allow anyone to participate in liquidations to keep the system healthy. Because of the liquidation premiums, this actually could allow you to buy BTC at a discount, which is pretty cool. And LP incentives, which I already kind of talked about a little bit. Right now it's paid in STX. And the alpha is that points are coming soon. So that's very exciting. Granite's going to be launching a points program in the next couple of weeks. We've been really consistently looking for ways to reward early Granite users. We've had creator bounties, we've done NFT drops and more. We're going to do definitely more of that stuff as well. But if you're here right now, you're still early. There's still time to join Granite before the points program launches. And the earlier you join and start using it, the more points that you'll start with. So that's the big alpha there. And I think that about wraps it up for me. Would love for y'all to check out Granite. Let us know your thoughts. We're very active on Telegram. If you need any support or just, again, have any questions, come say hi. But yeah, check us out, granite.world. And thank you for listening to me today.
Co-founder of Zest protocol, and yeah, very excited to be sharing more about the kind of backbone of Stacks DeFi. So yeah, I want to just tell a little bit about Zest protocol, and then go into how to earn yield on all your favorite assets on Stacks. So yeah, just to get it into it, let's see if we can go to the next slide here. We can. Okay. Yeah, we're really positioned to thrive on Stacks, right? Maybe to just start with the right. Have very respected backers in the Bitcoin ecosystem, right? I mean, Tim Draper, of course, right, the legendary Silicon Valley investor and Bitcoin pioneer. Munib himself through Trust Machines and Stacks and Binance Labs, right? Important as well, right? So kind of bridging that east and west in Bitcoin land. And then on the team side, that's me and my two co-founders. And basically what we worked on is that we worked on Stacks before this. And we were core contributors to SBTC, which is kind of the underlying Bitcoin or BTC that Zest protocol uses on Stacks, as well as the Nakamoto upgrade. And yeah, as you all know, right, Stacks is really built to make Bitcoin programmable, and Zest is built to unlock all that BTC as collateral and a yield-bearing asset. Right. So BTC is pristine collateral. There are trillions of dollars in loans that will be issued against BTC. And today we already see that DeFi lending is growing much larger than CeFi lending, right? So the decentralized platforms like Zest protocol are very much taking over centralized market share, right? As you can see here, that the black bar charts are just kind of taking over, in this chart. And then at the same time, right, BTC-backed loans demand is growing very, very fast, right? So you see here that, for example, on Coinbase, right, the amount of BTC posted as collateral is a straight line up and to the right, and yeah, that's basically what we're positioned to do. But then in DeFi, right? So whereas Coinbase would fit in this little orange bar here, we are going for this piece of the pie, which is very exciting, right? Especially on Stacks. So yeah, we've had a lot of growth over the past year. Zest briefly reached 100 million TVL as I think the second protocol on Stacks to reach that amount. Right now is sitting at about 80, with over 500 BTC deposited and almost 10 million borrowed against it. Let's see the presentation here. Still says 5, but that's an old statistic. And yeah, lots of stable coins to borrow. Oh yeah, the 5 million is borrowed against BTC, but 10 million in assets borrowed, also against STX and staked STX and all these other very exciting assets on the chain. And yeah, most audited protocol that's been around, highest TVL and processed over 1,000 liquidations already, without creating any issues in the protocol, which is all very exciting. And yeah, and then basically Zest is your gateway to yield and DeFi strategies on Stacks, right? So this is a quick overview of a couple of strategies that you could do with Zest protocol today, or that we basically see users do with Zest protocol. First off here is earning yield on your BTC and other Stacks assets. BTC today, or generally on Zest protocol, earns between 3 and 4% APY, which is very, very strong. And you can also amplify your stacking yield with STX looping. So maybe earlier in this presentation you heard about staking your STX and liquid stacking with Stacking DAO, where you can mint a staked version of your STX token. And then on Zest you can post your staked STX as collateral and borrow more STX to then create even more STX staking yield. So that's also a very popular strategy. And then the third one is to use your BTC as collateral to borrow stables and convert them to USDH, which is what Jacob has just talked about, I think 1 or 2 presentations ago, which means that you can post your BTC as collateral, say, earn 3 to 4% on that, then borrow USDC, which only costs 3%, so you're already in the money there, and then swapping that USDC for USDH and staking that to get some very interesting APYs here. Yeah, so let's quickly go to Zest protocol, what it looks like. So if you land on on the application, this is what you'll see. This is the market overview. You'll see like the 87 million of assets deposited, and you can see which assets there are and what their APY is, right? So here we see BTC at 3.2, we see stacks at 4.7, staked STX, USDC, etc. And then, if you want to borrow against your assets, you simply go to the dashboard, connect your wallets, which I have already done with Tyco.btc, and then supply an asset that can be collateral, right? For example, SBTC, and then you can, from this column, you can essentially borrow assets such as stablecoins or STX or other assets that are borrowable in the system and execute your strategy. So make sure to follow us on X for all the information about all the strategies and Zest protocol growth and more. And make sure to put your BTC to work on Zest, right? That's 3% APY is a very nice start, and then getting to more and more strategies as you feel more comfortable, right? So that's a quick overview of what we do, and how this all fits as the kind of coat hanger of Stacks DeFi. So I was very excited to show this, and feel free to follow us or reach out to me on X, and then we can talk more. All right, handing it over back to Adam, I believe.
Thank you so much, Tycho. Thank you to all of our speakers today. Thank you to our audience. So, ladies and gentlemen, that is a wrap of Workshop 1, STX Bitcoin DeFi Basics, Owning Your Finance and Earning Yield. So I want to thank you all for being here. I hope you learn a few new things today and you feel equipped to get into the game and begin your Bitcoin DeFi journey. I want to one more time send a special thank you to our lineup of speakers for educating us today. We had Kate talk to us about native stacking. We had Jacob present staking a Bitcoin-backed USD stablecoin, USDH, by Hermetica. We had Brandon enlighten us about borrowing Bitcoin and earning interest. And as you just heard Tycho wrap up, rounding out our speakers, supplying Bitcoin liquidity and earning yield through the Zest protocol. So once again, round of applause. Big thanks to all of those speakers for taking the time and having some fun with us on this Tuesday morning. So next steps is it's time to get into the game. It's time to put this knowledge that you have learned today into action. And we have some bounty challenges for all the viewers at home. As long as you registered for this workshop using our Luma page, just be sure to check your email following this workshop, register your Stacks wallet, and have a chance to earn some STX rewards. And based on today's workshop, you should know how to put those STX rewards to work and truly optimize those rewards. So to close things out here, just a reminder to tune into our next session, which will be workshop number 2 of this 3-workshop series, STX Bitcoin DeFi Strategies, Own Your Finance and Earn Yield. I'm your host, Adam Hahn. Thank you for being here, and I'll see you next time. Take care, everybody.